Hello everyone and welcome to today's video. Hope you all are doing good. So what we have brought for today's video is details regarding ESOPs. What ESOPs are. Let's understand what we'll cover in this video and what are the contents for it. So first of all, we'll understand what is the definition, what are the various terms that are related to ESOPs, what is the usage of ESOP, both from the standpoint of employee and employer, the unknown facts regarding ESOPs and the taxation implication in the hands of employee for the ESOPs that he or she receives. So let's get going. First of all, introduction to ESOP. An ESOP, employee stock ownership plan, refers to an employee benefit plan which offers the employee an ownership interest in the organization. Employee stock ownership plan are issued as a direct stock and as profit sharing plans or bonuses. The employer has the sole discretion in deciding who can avail these options. However, these options can be purchased at a specified price and that too before the exercise date. Now, let's understand the concept of ESOP and understand how this actually works. So, an organization grants ESOPs to its employees for buying a specified number of shares of the company at a defined price after the option period, that is a certain number of years. So before an employee could actually exercise his or her option, he needs to go through a predefined vesting period. Now the question will come, what is vesting period? So vesting period is basically the time frame within which the employee needs to stay connected with the organization and then he can exercise the ESOP before the expiry date of exercise period. So the vesting period is the tenure in which the employee will get ESOPs. It can be such as if you are allocated 100 ESOPs, 100 shares in the ESOPs, and those are to be deferred in a tenure of 4 years. So it can be a case whereby for every completion of 1 year, you will get 25 shares or 25 ESOPs. So the vesting period here is 4 years, and at the completion of every 1 year, you will get 25 ESOPs, or however the bifurcation is there done by the employer for the overall ESOPs that you have been allocated. It can be in the ratio of 10%, 20%, 30%, 40% in the fourth year. It can be reverse as well, 40%, 30%, 20%, 10%. However, the reverse case is not seen in practical world. But yes, generally it is seen equally or gradually it increases as and when you stay connected with the organization, staying as the employee of the organization. So that is the vesting period. Now let's understand why a company will offer you ESOPs when they employ you. So organization often use employee stock options as a tool for attracting and retaining the high quality employees. This is generally done by the startup organization or the organization that are there in the initial stages of their cycle. So organization usually distribute the stocks in a phased manner. For instance, an employer might grant its employees the stock at the close of the financial year. Companies offering ESOPs have long-term objectives. Not only company wish to retain the employees for long term, but they also intend to make them stakeholders for their companies. For many companies, mostly the IT companies, they have alarming attrition rates, and ESOPs could help them bring down such heavy attrition rates. And definitely, startups offer stocks for attracting talent because definitely startups at the initial phase they will not have that cash liquidity to offer to the employees or to pay them such heavy salaries. Correct. So they'll be unable to offer such handsome salaries, but by offering a stake in the organization, they can make their compensation package a bit competitive. Now let's understand ESOPs from the employee's perspective. What is the benefit that the employee gets? With ESOPs, an employee gets the benefit of acquiring the shares of the company at a nominal rate because this is a predefined rate. That rate which the organization decides during its initial stages. Definitely, as and when the startup progresses, it achieves its growth rate, growth stage, when it goes for IPO valuation, all that stages. So at that time, whatever the fair market value will be, that would definitely be, if everything goes fine, if the company achieves its phase, then definitely what value you have got your ESOPs at the predetermined price is definitely very low compared to the price that would be there when the shares get listed or when the shares would be trading on the stock exchange. So you can actually sell them after a defined tenure that is set by the employer, and then you can make a profit. There are several success stories of an employee ranking in the riches together with the founders of the company. A very notable example is of Google. When the company went public, its founders, Sergey Brin and Larry Page, they became the richest persons in the world. Even the stockholders employee, they earned millions too. So now let's understand the tax implication. So employee stock option plan is considered as perquisite with respect to taxation. On the other hand, for an employee, ESOPs are taxed at two below mentioned instances. One is as a perquisite and one is as a capital gain. Let's understand each of these one by one. So as a perquisite, when an employee exercises his option, that is after completion of vesting period and before the expiry of exercise period, when an employee exercises his option, the difference between the fair market value as on date of exercise and the exercise price, that is the predefined price which the employer or the organization has agreed for during the joining of the employee, the difference between that is taxed as a perquisite. Coming to the capital gain. So while selling the shares, the income or the profit is taxed in the form of capital gain. Let's understand how. So when an employee might sell his or her share after buying them, say in case when he sells the share, they are higher than the fair market value as on exercise date. तो हमने एक बार तो टैक्स पे किया जब हमने वैल्यू ली फेयर मार्केट वैल्यू. सो इन केस आपका सेल प्राइस ऑफ दैट ESOPs is greater than fair market value जो हमने perquisite के टाइम ली थी, then you will be taxed for that difference amount as capital gain. So let's take an example. Suppose predefined price या फिर exercise price जो थी ESOPs की, what was available to you was ₹10 per share. Okay, and you were allotted 1,000 shares. Say for take example. So now the total value is 10,000. But when you actually exercise the option, that is an exercise date, the fair market value was say rupees 50. So 50 into 1,000, 50,000. So ये जो 40,000 का gap है, this will be taxed as perquisite. Okay. Now suppose after few years you sell these shares and that time the value becomes 100 rupees per equity share. So 100 into 1,000 shares that you had, that is 1 lakh rupees, and 50,000 तक की value हमने already consider कर ली थी till perquisite. So 1 lakh minus 50,000, that is the balancing 50,000 will be taxed as capital gain. Now let's understand what are the benefits of ESOPs for the employers, as in why the employers are actually providing ESOPs to the employees, why are they actually providing the stake in the organization. This acts as a motivation to the employees when the company share price soars. It also helps in retaining the employees, paying off when they work hard. Definitely, for retaining the talent, it is must to provide them competitive salary and even avoiding cash compensation. This actually helps the company in saving the immediate cash outflow because the employer will not be asking for an immediate handsome package now because they understand that ESOPs is a part of their package, their CTC, so which they can exercise during the exercise period and before the exercise closure. So they understand this and there would not be an immediate cash outflow which they can utilize in raising their startup, in taking their startup to a great stage or to progress it further. So hope you liked the video. Hope this concept was made clear by our content. For any doubts that you have, do post them in the comment section. We'll be more than happy to address them. Till then, stay happy, stay safe. We'll be out with a new video tomorrow. Yes, but do subscribe to our channel and hit the like button. Thanks.